Today we're going to discuss two key accounts to focus on when conducting the period end close, credit card tips payable and house bank. The purpose of the period end financial close is to verify accuracy so you can understand where your money is going in order to make smart business decisions. When closing out the period, it should start with a review of the financial statements. Focus should be on locating specific adjustments needed and identifying why they occurred. Was it an issue with accuracy in what was entered, or was it entered late, causing expenses to show in the incorrect period? Lastly, establish where operational development opportunities lie in order to put action in place to coach and develop the team. Now let's dive into the first key account, credit card tips payable. These are tips that you collect throughout the week and pay out to employees on their paychecks. When paying out credit card tips on checks, having a weekly pay frequency is critical to ensuring proper cash flow for both the employees and the restaurant. Let's begin with why these accounts get out of balance in the first place. When the tips are paid out through payroll, and it varies from the tips that were entered in and recorded through the cash allocation for the day when recording sales, it's going to cause a discrepancy. When the tips on the balance sheet hold a positive balance, it means that the money has been collected from guests but not paid to employees. When the balance sheet holds a negative balance, it means that more money has been paid out to employees than was attended from the balance collected from the guests. In order to correct the issue, you need to first determine if the balance sheet holds a negative or positive balance. If the balance is positive, then first determine which employees were shorted tips on payroll and pay the balance owed on the next payroll to clear out the balance remaining on the balance sheet. If the balance is negative, then you need to determine if you're able to recoup the overpaid funds from the employee. The ability to do this will depend on the state labor laws and regulations. If you can recoup the funds, you'll want to communicate with your accountant the name of the employee and the incorrect amount. They will record it for bank reconciliation and provide the new total amount to recoup inclusive of all tax considerations. If you are not able to recoup the funds, have your accountant move the balance from the balance sheet account to the appropriate expense account, such as payroll, other, or bad debt. Properly recording and reflecting credit card tips payable matters because payroll compliance should be a top priority for any business. The payroll should be compared to what was recorded as collected prior to submitting to avoid payroll discrepancies and audits. Some best practices when recording credit card tips is to review the total amount recorded via sales entries and ensure they match the total on the payroll. It is also recommended that you review the previous week's balance sheet to ensure that no balance exists prior to sending payroll. The quicker an issue with pay is isolated and resolved, the easier it is to track down and allocate the appropriate funds to the applicable individuals. Now let's discuss another key account, which is house bank. House bank is inclusive of all of the money within the four walls of the restaurant. This is typically any money in your safe and in your drawers. House bank will get out of balance when paid outs are recorded but the reimbursements to the house bank are not, when negative cash deposits and the money to bring the house bank back to till are not properly recorded, and when house bank is used incorrectly to record bank reconciliation questions. Remember, this is money in your restaurant bank, not the physical bank itself. To correct house bank, you first have to determine if it is understated or overstated. If it's overstated or positive above the expected actual cash, you're going to communicate which items were purchased but not recorded so they can properly expense them. If no purchases were made, review the trial balance to isolate errors and communicate any needed adjustments to your accountant. If the balance sheet is understated or below the expected cash balance, then you're going to review the trial balance to determine the activity that was incorrectly stated to that GL. Communicate any adjustments to your needed to your accountant. Keeping house bank at the correct balance is important because it represents the money that you own as a business, in other words, your asset. Balance sheet accounts roll year over year. Therefore, if this balance is not accurate, then adjustments will need to be provided at year end. In addition to avoiding adjustments, you can also see where every single penny of your cash is living and verify all cash deposits are fully making it to the bank. Best practices with HouseBank include reviewing the GL balance on a weekly basis to ensure that all cash activity is accurately represented. Keep special eye on items that are in your HouseBank that don't belong in your restaurant cash. The final to-dos in order to properly close a period are to review the focus accounts discussed today and communicate any needed adjustments to your accountant. Complete the bank reconciliations if applicable and ensure proper coding. And lastly, communication with your team is critical in success. Take time to coach on opportunities and really celebrate those successes with your team. Thank you so much for joining and have a wonderful day.